It's The Big Take from Bloomberg News and iHeartRadio. I'm Wes Kosova. Today, helping countries get rid of debt in exchange for cleaning up the water. A few weeks ago on the podcast, we talked about green bonds. That's this increasingly popular investment where you help a government or company fund an environmentally friendly initiative like a solar project. And you get your money back with interest like any other kind of bond you might buy. Green bonds are upwards of $1 trillion market now. Today we're talking about a different kind of eco-friendly deal that's starting to take off. It's called a blue bond, as in blue like water. The U.S. environmental group, the Nature Conservancy, has teamed up with banks to offer certain countries a deal. They'll help them get out from under crippling debt if they agree to tackle polluted coral reefs and other dirty water systems. These kind of agreements are also called debt for nature swaps, and they've been around for decades. The Nature Conservancy's blue bond model, which focuses on water, is just one way to do it. So far, a handful of countries have signed up, including the Seychelles, Barbados, and Belize. They are really complicated deals, and it's not always clear who benefits the most. My colleague, Sydney Maki in New York, has been digging into them, and she joins me now to tell us how it works. Sydney, thanks for being here.
Happy to be here.
Blue bonds can be a little bit intimidating to try to understand. Can you give us a simple explanation of what they are?
Yeah, so oftentimes when a government is trying to find ways to raise money very quickly in order to prop up their economy, run projects that are important to the nation, they will turn to Wall Street in order to do that. And they'll essentially sell bonds and raise debt in order to very quickly get US dollars. But that tends to be pretty expensive. And so after a while, if a very large sum of debt has piled up, just like you or me in our credit card bills, it can get unwieldy. And so a government will sometimes try to find some kind of alternative solution to pay back its debt if it's too much. And that's where blue bonds come in. So for certain countries, especially those that have really high debt loads, but also are located along the coast or have very ocean-dependent economies that run on tourism or fishing, that's where we're seeing opportunities for these new investment vehicles called blue bonds. And essentially for these governments, they're an opportunity to take some of this very expensive debt that they've borrowed from Wall Street and swap it for what is theoretically a more affordable loan through a US-based charity called the Nature Conservancy, which is working with a handful of other banks, including Credit Suisse. And the upshot of all of this is essentially that the savings between the more expensive debt and this newer, less expensive, quote-unquote, blue debt will be used to fund certain nature-saving measures. So ocean conservation, new fishing laws, things that theoretically will help to offset pollution and climate change in those ocean-based economies.
So essentially what they're sort of doing is refinancing their debt and then keeping the amount that they save to fund the projects that they need to fund.
Yes, exactly. So best case scenario, a country is able to lower their debt load, owe less to Wall Street of this very expensive debt, and at the same time that they're saving money, they're able to funnel some of those funds into environmental measures, which of course have become so important worldwide, but also on Wall Street, we've seen similar investment ideas pop up like green bonds. So this is just another part of this environmental and social focused investing rainbow.
So I can see why one of these countries would find a blue bond attractive. They lower their debt and they get found money. What is the incentive for a bank and for this environmental group, the Nature Conservancy, to do this? What do they get out of it?
Well, for the Nature Conservancy in particular, they're a US-based charity focused on environmental protection, conservation, and they've found this way to use money in innovative ways to do this. So they're effectively able to further their mission, further their goals, by working with governments to have very specific pathways for how the money will work. It's also sort of nice because they're able to set it up where they're able to then step back and let the money and the program do its work for a long period of time. So I think for the banks, of course, everyone likes to be a part of something that is seen as on the right side of history, pushing for these environmental measures. But of course, I think there's opportunity there. If you're able to be involved in some kind of innovative financing plan, like the Blue Bonds Initiative, I'm sure they're making money off of it. There would be little sense in becoming heavily involved in a program that is purely charitable without being a charitable organization. And banks, of course, are still trying to make money. So I'm sure that although we don't have great insight into the exact fee structures and the exact ways the banks are profiting off of some of these deals, it's a safe assumption to make that they are, in fact, making money off of it.
So when you think about the worldwide bond market, which is trillions and trillions of dollars, how much are blue bonds right now? How much of that does that represent?
A very tiny portion. These deals have only been done a handful of times. Seychelles was the first, as you mentioned. There was a larger one done in Belize, which is a fascinating story of its own. That government has had a bit of an infamous history in terms of its relationship with Wall Street and its ability, or rather inability, to be able to pay its debt back over time.
How does a financial institution that creates this investment make money off of it if they've made it less profitable?
So that's the question. The fee structures in debt deals are not always the most transparent. In a deal like this, especially a structure that's so new, so novel, it's hard to really dig in and see exactly how the cut of the proceeds is trickling out. Now that we've seen a few of these deals, I think there's going to be more focus on who is making money here. But of course, a bank is a business and they have to make money. So as nice and as good as some of these environmental pushes are, they are also doing it for a profit. And that's something to keep in mind is every person involved in a deal like this has a motive, and they can be twofold. They can be a motive toward having a greener, more sustainable future, but also folks want to get paid.
So that's a good point. I mean, am I cynical to think that maybe a small country that has a lot of debt and is turning to a big financial institution might not be getting the best deal here?
I think it totally depends on the country and the situation. You might have an example like Belize, where they have had trouble repaying their debt for years and years. Their debt has already been restructured, so essentially they've had to go back to their creditors on Wall Street and beyond and say, we can't pay. Let's come up with a deal to, hopefully lower the amount we owe or come up with a new payment schedule. And it hasn't worked. So for a country like Belize, trying to find an alternative like this blue bond exchange program where they can go down a new avenue and try something different, that is an opportunity. And it might not necessarily matter what the fees are, what the structure is, if it's a better option than what they've been trying to do.
And we're going to hear more about Belize's experience with blue bonds in just a little bit. Sydney, typically a country that finds itself in a situation like this might go to the International Monetary Fund, an organization that helps countries in this sort of situation. Why don't they go there instead of turning to the Nature Conservancy and financial institutions for these blue bonds?
That's a really good question. And I think, again, it depends on the government, who the leadership is and what their goals are. Working with one of these large multilateral lenders like the IMF can be a good option, but it often comes with different caveats that a government has to keep in mind. The IMF might ask a government to go through different economic or political reforms, things that the IMF sees as really important for long-term sustainability for the country, but also they could come with measures that are painful, austerity measures that are tough to stomach for a country, especially one where people are already suffering under the weight of high inflation, higher prices, or other economic challenges.
So under those terms, governments have to agree to a lot of different conditions. Are there conditions put on blue bonds by, say, the Nature Conservancy where they have to meet certain targets?
Yeah, so in that way, it's a little bit similar, except instead of having these targets be focused primarily on economic initiatives, the Blue Bond program is focused on ocean and marine conservation. So I think for most of the deals that we've seen so far, the goal is for about 30% marine conservation over a period of time. So that could include a lot of different things. Potentially passing legislation that formally designates protected areas. It could be changing fishing laws or implementing different programs to crack down on illegal fishing or other illegal operations that can harm the environment. So it's a different goal set, but with the Blue Bond scenario, it's one that is very much focused on trying to make the oceans a cleaner, safer, and protected place.
Sydney Maki, thanks so much for speaking with me today.
It was a pleasure. Thank you.
After the break, we'll see what a blue bond deal looks like in real life. We've been hearing about how these blue bonds, these debt for nature swaps, how these deals work. Now, let's see what they look like in real life. My colleague Natasha White covers environmental investing, and she's written a story about a blue bond deal in Belize. It's one of the first. Natasha, thanks for coming on the show.
Hi there. Thanks very much for having me.
Tell us first just a little bit about Belize and why they wanted to get into blue bonds.
I guess if we go back to late 2020, the country, which is highly dependent on tourism as a main source of revenue, was really struggling as the COVID-19 pandemic had shut that off. People were no longer able to visit the country, and that source of revenue had kind of dried up. And what it meant was the country was really struggling to pay back what it had borrowed. So it had what's called a Eurobond in the market, and it was looking unlikely that the country was going to pay that back. So it wasn't doing well in the market, and it was eating up its foreign currency. There was an option on the table. It was an IMF deal. The IMF is a typical kind of lender of last resort for countries that are struggling with unsustainable debt burdens. But IMF programs typically come with conditions, and those types of conditions often make governments balk.
And so Belize was already struggling because they'd lost so much income from the loss of tourism. And so those conditions were going to be a bitter pill to swallow if they went along with them.
Yeah, so Belize has been kind of labeled a serial debt defaulter. This wasn't the first time that they were struggling with their debt. And the option on the table for them was an IMF program, but that came with these conditions, these kind of austerity conditions, which the government effectively found unpalatable. But they also then had the second offer on the table, which was the Nature Conservancy, a US-based conservation organization that has a long history in Belize, and that had done a kind of what's called a debt for nature swap in the Seychelles a few years earlier, a much smaller deal, but nonetheless kind of piloted one of these deals, which have been around since the 80s, but in a kind of new form. And so they approached Belize, and the Belize government were excited by the prospect that they could pursue this avenue of restructuring their debt without the kinds of conditions that would have been imposed on them by the IMF.
And what did the Nature Conservancy approach them with? What were the details of the deal?
In the kind of bigger picture sense, what the Nature Conservancy proposed what's called a debt for nature swap. And that is a restructuring of the debt. And in return, some of the money freed up from that restructuring would be allocated to nature conservation projects. So in this instance, Belize had a $553 million bond in the market that, as I said, wasn't doing well. And the Nature Conservancy came in and said, we can help you negotiate. We will lend you money to buy back this bond. And in return, you need to allocate some of that money towards specific marine conservation projects.
Now, how exactly does this work on the financial side? Because the Nature Conservancy is an environmental group. It's not a bank, not a lending institution. So who put up the money?
Effectively, it's a kind of tiered crediting structure. So Belize had to first buy back this $553 million Eurobond from the market. It negotiated to do so at a discount, but nonetheless had to find the money to do that. So the Nature Conservancy set up a subsidiary, and that subsidiary lent Belize the money to buy back the Eurobond. The Nature Conservancy is a conservation NGO, it's not a bank. So they in turn raised the money from Credit Suisse, or a special purpose vehicle set up by Credit Suisse. And Credit Suisse in turn raised that money from the market, so from institutional investors' pension funds. And Credit Suisse did so in the form of issuing bonds. And these have been called blue bonds in the sense that they are connected to Belize's marine conservation projects that are an outcome of this deal. So this tiered money flow structure, where at the top of the chain, you've got institutional investors, which have lent money to Credit Suisse, which has lent money to the Nature Conservancy, which has lent money to Belize, it has used to buy back this ailing Eurobond from the markets.
So I can imagine the heads of a lot of our listeners are spinning with the details. I got to say, my head is spinning a little bit too. This is a really complicated structure. So is the Nature Conservancy sort of the broker here between Belize and Credit Suisse, the money behind this, and that it's the good name of the Nature Conservancy that persuades people that this is a good investment to make?
Debt for nature swaps have been around since the 1980s, but what I think is new in this round of recent swaps, of which Belize is the biggest, which the Nature Conservancy has spearheaded, is the involvement of, for example, an investment bank, Credit Suisse, and that Credit Suisse is able to raise money to fund these deals from the market, so from institutional investors. And that's a huge source of funds that have previously been largely untapped. And someone's termed them kind of turbocharged debt for nature swaps, in the sense that there's now this effectively unlimited pool of institutional funds flowing. Whereas in the past, it was more kind of deals done with bilateral lenders, so governments that, have limited funds.
So the bond that Belize had out was not doing well. They bought it back. Credit Suisse, then in partnership with the Nature Conservancy, cut their debt and reissued it for others to buy. Why is it that people are willing to buy this version of it when they weren't willing to buy the previous version?
Critically important to this deal was a kind of insurance policy from the US International Development Finance Corporation, which effectively de-risked the deal for investors and effectively put the US government on the hook if Belize failed to pay.
So people invest in it, they can feel good about it because they see that this is going toward cleaning up coral reefs and other things like that. And they don't have any risk that Belize, which you describe as a serial defaulter, will default again.
Right. So I spoke to one of the pension funds invested in the blue bonds, and they were excited by them because they were low risk, compared them to effectively US Treasuries in the sense they've got US government, something similar to a US government guarantee. And at the same time, they are linked to marine conservation, so they have a kind of ESG label on them.
Up next, what are the future of blue bonds? So they made this deal. How's it going? How did it work out?
It cut Belize's debt by 12% of GDP. It reopened its access to financial markets, and it redirected money that was once destined for foreign creditors into the local economy. And at the same time, Belize promised to funnel millions to protect its oceans and nature. I think regarding the long-term impact, only time will tell. Belize's debt remains unsustainable. So while it helped cut Belize's debt burden, it hasn't put the country back on a fully sustainable path. And while the new terms of the deal offer a lower interest rate than the Eurobond that was in the market and on a lower amount, that interest steps back up over the next few years. So they've got a bit of breathing room, but that interest does step back up. And in December, the first funds were dispersed to some of the marine conservation projects. But again, it remains to see how those will be managed and implemented over time. That is an unknown.
It sounds like a pretty good deal. They were able to get from underneath a debt burden, as you describe it. But was this the best deal that Belize could have gotten? Was this a good deal for them?
Right. So Belize are adamant that they have secured the best deal they could. But I've spoken to a number of debt experts who have looked at the conditions of the deal and have concluded that it's extremely expensive for what it is.
What do you mean by that?
One key element, as I described the credit structure, so Credit Suisse lends money to the Nature Conservancy, which lends money to Belize. And those interest rates on those loan structures are different. So Credit Suisse is borrowing money and the Nature Conservancy is borrowing money at a different rate to which Belize is borrowing money.
A lower rate.
They are borrowing at a lower rate than they are offering Belize. And so we've taken a closer look at that, what's called spread, the difference in the interest rates, and questioned it. Why aren't those lower borrowing costs being passed down to Belize? And the response from Credit Suisse and from the Nature Conservancy is that the lower borrowing costs have been passed down. And actually the reason for the difference in that interest rate is actually that it covers a number of costs. And so Critics are saying, why are we just finding out about those costs now? Why weren't those costs fully disclosed in the first place? This is public money that we're talking about, both from Belize, but also from the US taxpayers that are offering the insurance policy. And everything needs to be fully transparent. And it's both important for Belize, but it's also important for other countries that are looking to negotiate these deals in the future. They should know what it is that they're up against when they're negotiating with these organizations and these investment banks to put these deals in place.
And do you think that these debt for nature swaps, in particular blue bonds, are going to become more popular, that we'll start to see more of these deals in the future?
Yeah, so I think 2023 will be a big year for debt for nature swaps. These deals are attracting a lot of interest. Gabon signaled plans for a $700 million restructuring in October. Ecuador is said to be working on an $800 million transaction. And Sri Lanka is considering a $1 billion deal. So we're seeing both increasing levels of interest as well as an increasing size of the transaction under negotiation.
Natasha White, thanks so much for talking to me today.
Thanks very much for having me.
You can read more about blue bonds from Natasha White and Sydney Maki at Bloomberg.com. Thanks for listening to us here at The Big Take, the daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you listen. Read today's story and subscribe to our daily newsletter at Bloomberg.com/bigtake. And we'd love to hear from you. Email us with questions or comments to bigtake@bloomberg.net. The supervising producer of The Big Take is
Vicky Bergolina.
Our senior producer is
Catherine Fink.
Our producer is
Federica Romagnello.
And associate producer is
Zainab Siddiqui.
Rafael Amsili
is our engineer. Original music by Leo Sidran. I'm Wes Kosova. We'll be back tomorrow with another Big Take.